In today's video, I'll show you exactly where I'm looking to potentially sell the SPX, the S&P 500 over the coming days, and a pattern that looks eerily similar to 2022. Okay, so let's go ahead and take a look here at the S&P 500. And before I get started, I did mention to you guys yesterday that I did launch monthly and quarterly pricing for the VIP group. So that offer is still going on, 50% off, but only for the next 3 days. And also, I am launching a course next month in December that's going to show you exactly how to trade the liquidity-based system that I've developed over the past few months. I've back-tested it 12 months. I'm forward testing it right now. The results right now are very, very consistent, right around like 8% a month gain with a drawdown of around 4 to 5%. So it's a very solid system so far. It does use the 1 hour time frame, and so far I've tested it on the Euro USD and also the SPX. So October ended with about a 9% gain. So far in November, the SPX alone has produced a 9% gain. So again, I will be launching a course showing exactly how to trade that system next month. So see the link at the top of this video for 50% off monthly, quarterly, and lifetime options for our VIP group. All right, so let's go ahead and take a look here at the S&P 500, the SPX on the daily time frame. And it's very clear that we do have this market trending lower. So making lower highs off of this trend line up here. We've also got a trend line off of that closing price here in August. Okay, so off of these lows, we also have a trend line creating a descending broadening wedge. Now, the recent rally obviously has been very aggressive ever since we saw the SPX sweep these lows back here. Okay, so 4220, we had a lot of sell side liquidity that built up down here in this area. We saw the sweep, the reclaim, and a very aggressive rally. Now, it's only a matter of time before we eventually see a rotation lower for the SPX to sweep once again the sell side liquidity that's built up, because we talk about this a lot, but look at these daily candles. Okay, we had a little bit of a retrace here. This was actually a bigger retrace than what we've had during this almost entire time, because you can see back here, right? We got the breakout candle. This was the one that reclaimed. There was absolutely no retracement of that candle. Once again, same thing here. The market closed here, closed up here the very next day. So once again, no retracement through this area. So we've got liquidity building up down here in this area through this candle, and also down here around 4220. So we know that, again, it's only a matter of time before this market is going to want to flush that sell side liquidity. But of course, as always, it's a matter of timing, right? You don't want to just go out and try to short a market like this that's in this kind of uptrend, hoping that it moves lower to take out that liquidity. So instead, what we're looking at here is buy side liquidity that has built up above 4,400. So we've got the highs from back here. We've also got this big red candle, okay, in this area, that once again, there was no retracement of this. So we know that there is liquidity sitting up here above these highs from October. All right, so the market trading right below those, there is a good chance that we see the SPX come up here, retest these highs, maybe consolidate a little bit, and then take out that buy-side liquidity that's sitting above 4,400. Okay, so what I'm looking for here from the S&P 500 is a retest up here at these highs, consolidate for a bit, right? Build up even more liquidity in this area, tap that liquidity, and then from there, I'm going to be looking for a potential close back below 4,400 for that short to start clearing out the liquidity that is built up along the way. Okay, so the trigger for this idea is going to be to see the buy side liquidity taken out up here at 4,420, the close below 4,400. All right, so that would be the trigger for the short, because alternatively, if we see the S&P 500 start to base above this, right? Close up here, start to base above this, then we're looking at that move up here toward levels like this. Okay, so, again, you don't want to just go shorting this blindly. You've got to have triggers in place, and that's what I'm looking for, a tap of 4,420 and then potentially a close right back below 4,400. Okay, now let me show you why I'm especially interested in this pattern that's developed. All right, so if we go all the way out here to 2022, what you're going to notice is that the pattern that we've had recently, this descending broadening wedge, is very similar to what we got back here in 2022. So almost the entire year was trading within this descending broadening wedge. You can even see where we got the breakout right through here, a rounded retest down here at support, and then that right there was the trigger for this massive rally that we've had. Okay, so it's a very similar pattern, only much smaller. Okay, so the question now is this going to repeat? Is history going to repeat? And we are going to get a retest up here, okay, potentially a liquidity sweep up here at 4,420, all right, just above this trend line, followed by that rotation lower. Okay, so that's the big question. Now, a lot of people might be looking at this on the weekly and saying, well, if you look at this on the weekly chart, right, the market just put in this massive bullish engulfing candle. So why would you try to trade against that? And what I would say to that is if you look over here during 2022, we also saw something very similar within that broadening wedge. So notice back here, right, an established downtrend, the market started making lower highs and lower lows. And you can see right here, we did get a very similar weekly candle, right? We then got a rally for the next 2 weeks, followed by a very aggressive sell-off. Now, look here once again, we had a bullish engulfing candle on the weekly, and the S&P basically opened the next week, swept the liquidity above that weekly high, and then again, a very aggressive sell-off. So once again, we have to ask ourselves, right, based on the weekly candle that we just got, okay, and also this descending broadening wedge, is this going to play out similarly to 2022? And obviously we don't know that. Nobody knows where this market is going to go. But when you look at this, it is very similar to what we got back here. Okay, now let's take a look at the DXY here, the US dollar index, because this is really going to be the key for this pattern. And I hope you guys are still around, still watching this video, because this is really going to be key. Anybody who tuned out already is going to miss something that is very, very important for this idea to have any chance of playing out. And that is that, right now, okay, the market is coming into 105.60. So this is the area that we've talked about for the US dollar that is critical. The market lost this last week. We had a weekly close below it. We talked about this area at 105.06. Okay, this pivot through here. And back here, I was looking for a retest up here at 105.60. So we got that. And so far, the DXY is holding below this area. Now, the reason this matters is because if we see the dollar continue to weaken and this area holds as resistance, okay, if it continues to weaken, we get a retest down here and then a sell-off toward 104.30, that's going to make it very difficult for the scenario that I just described on the SPX to play out, because a weaker dollar will typically mean higher equity prices. Okay, so for the SPX to rotate lower, especially to rotate significantly lower, like I think it might, we would have to see the DXY reclaim this area up here. We have to see some daily candles getting back above here on a daily closing basis, also the week close back above this, in order to signal that this down here is our fake out and send the market back here towards some of these highs. Without that, though, again, it's going to be very, very difficult to see something like the S&P 500. All right, if we go back here to the daily time frame, see something like the S&P 500, do this, right, over the coming days and weeks. That is very unlikely unless we see the dollar start to strengthen again and reclaim the 105.60 area. All right, so this is going to be key. I can't stress that enough. So don't just go and look at the S&P, and if it trades into this region, to just start shorting it with everything you have, because again, you have to pay attention also to what the DXY is doing. And this is all stuff that we discuss every single day in the VIP group, right? Again, without a reclaim up here for the DXY, it's going to be very difficult to see equities correct, especially a significant correction, down here toward levels like 4,200 and potentially taking out that low around 4,100. That's simply not likely to happen if the dollar is staying weak and carving lower highs and lower lows. All right, but with all that said, I do think this is one to pay attention to, especially when you consider how similar this current pattern is to what we saw in 2022. It is, much smaller, but the similarities are certainly there. All right, that's it for today's video. Be sure to smash the like button and also subscribe to the channel. And don't forget, guys, 50% off monthly, quarterly, and lifetime options right now for the VIP group. The course launches next month. I will see you guys on the inside. Trade well this week, and I will talk to you again soon.